Hey everyone, welcome back to your weekly market outlook. This is for the 3rd of February 2025, obviously the first full trading week of February and also the NFP week. Alright, let's take a look at last week in terms of data on what we have. Obviously we have interest rate decisions. We got Bank of Canada cutting down 0.25 or 25 basis points there. ECB is also cutting down 25 basis points there. Other than that, the Fed funds rate remains stable at 4.5%. Comments coming out from the FOMC, I think it's a little bit more neutral rather than anything dovish at this point in time. Also, one thing to know, inflation numbers in Australia has been dropping down, so we might be expecting a little bit of a dovish move coming out from the RBA in the near future there. PCE numbers as expected there. Year-on-year PCE though, it does pick up a little bit, so I think inflation there is not really coming down as quickly as what the Fed is expecting, and also that's probably giving another reason to why Fed should be a little bit more careful in terms of the interest rate decision there. Alright, so this week obviously employment weeks from the US. Chinese market still going to be on holiday today. Hong Kong and Taiwan market is already open today as well, and obviously we have Trump announcing tariffs for Canada and Mexico. That's going to be on 25% tariff on Canada and Mexico, as well as 10% for China. Obviously, we are looking at very early reaction in the morning. There's a lot of movement, volatility as at time of recording here. ISM manufacturing PMI numbers coming out from the US tonight. That's going to be expected at 49.3%, 49.3. This is still going to be below 50. ISM services PMI tomorrow. ADP NFP numbers, that's going to be on Wednesday. We got JOLTS job opening numbers on Tuesday, and obviously main show for the week, the NFP numbers here. We are going to be looking at a number close to about 150,000 there. We do have that surprise 100,000 gain last month for the NFP numbers. The unemployment rate is expected to remain stable at 4.1% here. That's pretty much it in terms of data this week. Sorry, one more thing. The Bank of England also expected to cut 25 basis points. That's going to be on Thursday. All right, let's take a look at the technicals. And I want to bring in something different here. This is the Dow Jones Industrial Average. This is the US 30. And we can take a look at what happened last Friday there. The candles that you're looking at, that's actually Monday's candle. So we did actually open a lot lower, and you can see the reasoning behind that on this the sell-off on Friday. That was the December high before the fall. We did not achieve a new all-time high there. Market was still lower below 45,091 on Friday last week. But it did reach that 45,000 level, and we see a lot of profit taking happening, and we see a little bit of a turnaround in the market. So we do expect a little bit of a correction on the US 30 here. How deep of the correction is, we're currently looking at maybe about 43,500. A worst case scenario though, it could pull down a lot lower. There's a lot of room here. The RSI has already confirmed an oversold condition here. The stochastic has not yet confirmed an oversold condition as of yet, but we're looking at a lot of volatility in the market, especially with Trump's tariff there. A lot of concern that inflation could pick up. We are looking at the effect of the 10-year yields here that has been gaining. We're looking at a stronger US dollar at this point in time, and that kind of spills over to all of the major currencies there. You can see the gap that has opened with the Aussie this morning here. That gap, it's pretty much pushing Aussie below 62, very close to 61 cents in fact. And right now I think there's a lot more room to go to the downside. We might see a little bit of a pullback to kind of fill in that gap there, so expect resistance to come in at 62 cents. But yeah, we do expect further push lower. I think we might even be able to push below 61 cents if there's a confirmed rejection at 62 cents. For the euro, we're currently projecting a move towards 1.01. Again, we have that gap in the market there. There was a huge gap in the market, pretty much about 100 pips minimum on all the majors here. We're looking at a 1 cent drop, 1 cent gap on Monday's open here. This is currently well supported at 1.02, but any break below 1.02, we expect further push to the downside. And obviously, that push to the downside, right now we're projecting around 1.01. That's where the support 3 is currently located. That's where 127.2% Fibonacci extension is located. But it does push the euro to potential parity closer at this point in time. Momentum wise, the RSI is already dipping below 40, so we're expecting continued downtrend here. Stochastics here also halfway through on the cycle here. On the pound USD, very similar situation here. We have that stochastics crossing over, and the market basically opens below the key level 1.23, 1.2350 here on the sterling here. And if the Bank of England does cut interest rate here, we do expect further push lower. We are currently looking at 1.21 as our immediate support level, 1.2350 as our immediate resistance level for the sterling here. Next is the dollar Japanese yen here. Again, we're expecting stronger US dollar here, and with the dollar Japanese yen, how it has stabilizes itself at 154 to 155 range, even with the Bank of Japan interest rate hike there. And we can see how last week price was basically testing that low there, 154, 154.50, and today the market just grinds higher. We are currently approaching 156 at time of recording. Obviously, any break above 156, that's going to take us back to the bearish order block number there between 157 to 159. Stochastics looking good at this point in time. We have that crossover, and we're just waiting for the RSI to tip above 60. Once the RSI tips above 50 and then 60, then we do expect a very strong trend continuation on the dollar Japanese yen, potentially even breaking that bearish order block that we have here on the dollar Japanese yen. All right, so with that, we are wrapping the outlook for this week. A lot of volatility is to be expected this week, especially comments coming out from Trump regarding tariffs. And basically, Trump has been hinting that Eurozone is going to be next. So keep an eye out on the market there. A lot of volatility this week. Good luck with your trades, and I'll see you soon.